Hey everyone, welcome back to CryptoCache. Thank you so much again for joining me here. Hope you're enjoying the show. Wow, 5% on the day here for Bitcoin. Looking pretty good. We last look at this here was somewhere in the range of about 55,000. It's really changed its tone here. So this is awesome news. Basically have my potential playout chart here from before still pulled up. Just to give you perspective, the whole goal was to take a long at one of these two areas. Price completely past those areas. So honestly, I wouldn't say it's invalidated per se. We may want to buy the dip here, perhaps at about 56,000. But we're going to talk about why waiting for that to happen obviously is probably advantageous, or perhaps even considering a short to that level. Now, I don't recommend shorting at this exact moment, but on the same accord, there's fair value gaps below the price action. There's a significant CME gap. It would make sense for the price pullback at some point. But we're also seeing a lot of volume too, so you got to recognize it's very risky taking a long in these conditions. So my speculation is if we were to consider a long or a short, whatever it is, you play it safe and make sure you work with tight targets and ensure that you are basically watching it the whole time. If you do end up shorting, keep in mind there's probably better profit left on the table than there would be on, for the inverse, based on just a simple fact that we're overextended. It would make sense for the price pullback, but I don't think we're going to get a monstrous pullback. Okay, the longer the price sustains this level, the more volume we see, the more likely we are to stay in this range. There's a lot of buying pressure. The bears are not really anywhere to be found right now. They're probably licking their wounds because they got smashed earlier. Let's go ahead and take a look at liquidation, see what's going on. Quickly to note, I want to say thank you to my community for the awesome feedback. It's excellent news. We have had some really good trades here recently. Cardano, 22%. 65% from SUI. While we could have done a lot more with what we have right now, it's a bullish scenario. We're playing it safe because, up until a couple days ago, people were, claiming that 40,000, 45,000 was the next target. While it's potential still to even see that 49K range, I still think that's a low probability, even when we came out as low as 52.5, right? Okay, so let's look at this liquidation here, just kind of give you perspective on what just happened here. I'm going to zoom in. You can see there's pretty much every one of these yellow bars is about $1 billion. So 57,000 upwards of 58,200. We saw somewhere in the range of approximately 10 to 12 billion in liquidation that just occurred with that one spike up. And that's how crazy the market is, folks. Like, imagine being somebody with a high leverage short position trying to catch the top. You're shorting this entire way up and you're getting destroyed every single turn. The best thing to do in this situation is to patiently wait. Me personally, I'm going to wait for today's candlestick to close, see kind of where we're at here. And if we're in a position closer to 58K, it would make sense to consider shorting, only because we plan to possibly have tight targets, and mainly because Asian markets are going to open up roughly after the US markets close, and they've been very strong in their selling pressure once that occurs. Okay, and I wouldn't be surprised. I mean, they got profit all the way from like 53,000 till now. You think they're not going to secure that 5 to 8% profit? I don't know. It just makes sense to me that they will. There's also fair value gaps on the price action too, which we can see here in a minute. Either way you look at it, I'm not screaming or saying you should take a short. It's absolutely high risk, but 1 and 1 is 2. I feel like a quick short would be appropriate. We're not going to short that bad boy all the way down to zero, right? There's no such thing. Again, holding it that long is just stupid. I mean, look at this here, for example. These shorts right here were opened back in September, like 3 weeks ago, and they're just about to get squeezed. How stupid is that? You know how frustrating it is to hold a trade for that long and to get put in the red? Now they're just too greedy. It just doesn't make sense. It's not a greed market. Don't do it. Okay. I've said my piece. Let's move on. Daily time frame. Let's quickly recognize here with the simple moving averages. We're underneath all four. All good. Generally favorable. In a sense of resistance being above us. Okay. And when I say all good, it's all good in the sense that we have some resistance above us. So if you're considering a short, that's a benefit. If you're in a long, you may want to consider securing some profit. I mean, you don't want to be super greedy either, right? In either direction. And just recognize we got a lot of resistance coming up now. 59,000 is that point of control for, you could say, the macro. Ever since we've been in this range here between low 50s and upper 60s, we've seen 59,000 be the most common denominator. We can also recognize too 60,000s right there, that 0.68 fib level, that golden pocket. So the price does come up there. We'll probably see somewhat of resistance there too. So my speculation is that 59 and 60,000, the price continues to run. They will be logical resistance ranges and areas in which you might want to consider shorting. So to me, a short at 58 seems appropriate at this point, just based on the overall sentiment and where we're at right now. In fact, I hope we close closer to 58 because I can almost guarantee that the whales are going to secure some profits, pull the price back down. just keep that in mind. Having said all that, let's take a look here at some other indicators. Really quickly to note, our TSI is finally swinging upwards. Our MACD is looking like it wants to converge. Our stochastic RSI is swinging up. We're still under 50, but very much a positive sign here. We bounced off 30 on the, or sorry, that 20 on the money flow index as well. These are generally favorable places to trade. Now again, hindsight's 20/20. You don't just take a trade based on those metrics at all. But again, earlier today, the 4-hour time frame was confirming that we're going to see somewhere in the range of 56,700 to basically test that local point of control, which you can kind of see here, has since been surpassed. So, I mean, if you look, this area is potentially a new support for us, right? We also have a fair value gap, though, as low as this previous resistance at about 55.8, round number 56,000. So to me, the logical place to consider a long is 56,000. What we also want to look at, too, and we can do this on the hourly chart, we'll pull up some Elliott wave and kind of see if that's a potential scenario. I can kind of see some patterns forming here. We're likely at the top of our impulse wave. Let's take a look at the 4-hour, though, really quick to note. We are getting close to 70 on the RSI. Generally, that's an initial rejection zone. Unless we see a magnificent amount of volume, it's going to be difficult to blast through 58, 59, or 60K. That's just my personal opinion, but the RSI right there at 70 is kind of a confirming factor, letting us know that a pullback would be necessary. Or it doesn't even have to be like a monstrous drop. It just has to be a slow taper to bounce off the local high, which in this case, again, roughly 57,000. But my speculation, I think 56K seems more logical. Let's take a look here at the hourly, and let's go ahead and get creative here. So when we look at the hourly time frame, just to clarify, first of all, Ichimoku cloud, all green lights, nothing to see here. There's no recommendation to take a short. Again, if you do take a short, pay attention, keep it tight, don't get greedy. That's just the bottom line. However, when we look at bigger picture here, we want to kind of pull up some new fib levels here. Let's go ahead and pull up some Elliott wave. Just recognize that we saw this nice little 1, 2, 3, which is generally the impulse, and 4 is going to come down to a fib level, right? So it's usually going to be the 0.5 fib level, and what we want to do is draw out the more recent fibs here from local low to local high, and then we want to kind of adjust this to that 0.5, which is right there. It's lining up synonymously with the previous resistance turn support. So 55,800, there's that common denominator. I would say 60,000 is a round number, solid consideration for a long at that point. Again, this is not a guarantee by any stretch. I mean, there's some folks that use Elliott wave only. I don't know how. I think it's pretty ridiculous. But the general consensus is that it's helpful because it gives you fib levels that price will commonly retrace to. So this situation here is fairly logical, where we should see 56,400. That's the 0.382. 0.5 at 55.8, and then 0.618, our golden pocket, basically our support level, at about 55,400. So somewhere in this range, we'll likely see a bounce. Just a matter of how far back the price pulls back. That's if it pulls back. You got to recognize we may see it continue higher. However, it seems pretty straightforward here that we were overextended earlier today when we talked about this. We still are at this point. We're at a 7 now. We might at best have another 2 or 3 hours worth of continuation. I'm really hoping we see a continuation back towards that 58K mark so we can consider a short there. But again, that's just me personally. Once more, if you do end up shorting, just please understand it's higher risk and less of a potential reward. You're probably better off waiting for 55.8 or 56.4 as the next area of support to potentially buy that dip. The other thing as well that leads me to believe we will probably see a price pullback is this fair value gap we see not just on the hourly, because the price shot up so quick from 55.4 to 56.3 that there is no chance to secure any profits, right? We see that it's also reflected on the 4-hour time frame here, from about 57K as low as about 56K. All right, so I'm just ballparking there, but that's an area in which we'll probably see retraced. So my speculation is 56K is a good long, and between now and then, if you want to consider shorting, just make sure you are safe and keep it tight, I guess you could say, for lack of better terms. Make sure that you're not being overly greedy. Worst case scenario, the price continues to trickle down lower throughout the week. We'll see our CME gapped at 54,000 filled, and that would be also a logical long. Again, I say logical now because it makes sense for the moment, but a lot of things will change between now and then. So don't just blindly take that kind of trade. We want to confirm we've confirmed bullish by that point if we do go down that low. And the only way for us to have that happen is for it to be kind of a slower progression, not an instant retracement. So again, a lot of little things that we need to pay attention to, but for now, this is kind of where we're at. I hope this was beneficial. I'm going to post our playout chart on Twitter, Telegram, and Discord. Oh, before I forget to, make sure you reference BTCC, folks. These guys are awesome. They have a bonus this month here for a nice solid amount on your deposit. This is a good alternative to basically, for those who are looking at no KYC or VPN requirements, at least avoiding those essentially. So probably more specific to my US Canadian members, but generally speaking, that's available for you there too. Make sure you use my link so you can be eligible for future trading competitions. I hope you all have a good rest of your day though. I deeply appreciate you. Hope you have one. Thanks again for your time. We'll see you.